Okay, let's unpack this. Today we are diving deep into, well, a fascinating and maybe even a bit counterintuitive area, looking for speculative opportunities in the nuclear energy sector. We've got some excerpts here from an article. It's titled Speculative Nuclear Stock Picks, Cameco and NuScale. Our mission really is just to go through these sources, pull out the key insights for you.
It really does seem counterintuitive at first, you're right, because, when you look at the big picture, the global nuclear power market, well, markets forecasts it growing pretty slowly.
How slow are we talking?
Just 2.9% compound annual growth rate, CAGR, that's between 2024 and 2029. Basically, the average yearly growth smoothed out.
Right. So, yeah, your first thought might be, okay, just stick with the slow growth stalwarts, the big utility companies.
Like a Duke Energy or maybe NextEra Energy, they definitely have their place, no question.
But here's where it gets interesting, and this is what the source digs into. It points to some really powerful why now factors, things that are kind of injecting new life, maybe prompting more investment into nuclear.
Yeah, things like geopolitical conflicts, hitting fossil fuels, obviously the big push for green energy, reliable low-carbon power.
And this is maybe the biggest one.
Yeah.
The absolutely exploding energy needs from cloud computing and, AI data centers.
Exactly. So even if the overall market growth looks kind of those factors are creating these specific high-demand niches within the market.
Okay.
And that's where this source we're looking at focuses. It highlights two companies specifically as speculative plays in these areas, Cameco and NuScale Power.
And the article makes a pretty bold claim, too, suggesting like a tiny investment. They even mentioned maybe $100 in one of these could potentially turn into thousands over the next decade.
Yeah, a big claim. Though it does add the caveat, they might be pretty risky short term. Important to remember.
Absolutely.
Yeah.
So let's dig into why these two companies, according to this source anyway, might stand out.
Okay, let's start with Cameco. Now, unlike those utilities we mentioned, Cameco isn't building or running nuclear plants. It's actually a Canadian miner.
A miner. Well, what exactly? Uranium.
Yeah. Uranium, yep. And a really significant one. The article says, back in 2024, Cameco was the second largest uranium miner in the world, responsible for something like 17% of global production.
Wow, 17%. Where are they mining?
They've got operations across Canada, the U.S., and also Kazakhstan.
Okay, so they dig up the fuel for the reactors. The source also flags this big strategic move they made, late 2023, I think it was, partnering with Brookfield Asset Management to buy Westinghouse Electric.
Yes, that Westinghouse deal. That's highlighted as a key strategic shift. Cameco took a 49% stake. Brookfield holds the other 51%.
And the benefit there, according to the source?
Well, a couple of things mentioned. First, it should help kind of smooth out the volatility. Being a pure miner is risky, tied to commodity prices.
Yeah.
Bringing in stable returns from Westinghouse, which actually does design, build, service plants, that helps.
Makes sense. And the second benefit?
And again, it could position Cameco to become like the preferred uranium supplier for all those Westinghouse plants globally, a built-in customer base almost.
But still, fundamentally, even with Westinghouse in the mix, their core business, their profitability, it's still really tied to the price of uranium, right? That underlying commodity.
Oh, absolutely. That's still the main driver. Right now, the spot price for uranium is roughly $70.
Okay.
But here's what's fascinating and a key point in the source. Bank of America has a forecast out there predicting the price could double, hit $140 by 2027.
Double. Wow. That's a huge predicted jump. And I'm guessing that connects right back to those why now drivers we talked about. AI, green energy.
Precisely. According to the article, a big chunk of that expected price jump for uranium is fueled directly by those soaring energy needs, especially from cloud and AI data centers. You need more reactors, you need more uranium. Simple as that.
Okay, so rising uranium prices, huge new demand from tech. The source also gives some pretty interesting analyst growth expectations for Cameco itself between 2024 and 2027.
Yeah, they expect revenue to grow at an 8% CAGR, which is, solid.
Okay, solid.
But the real kicker, according to the analysts cited, is earnings per share, EPS. That's forecast to grow at a much faster, kind of staggering 85% CAGR over that same time.
Whoa, hang on. 85% earnings growth versus just 8% revenue growth. What's the thinking there? How does that work?
Well, that's the leverage, right? The insight the source is kind of pointing to is that huge jump in profitability compared to revenue. It shows the incredible leverage a miner like Cameco has on the commodity price. So even if they only sell moderately more uranium volume-wise, if the price shoots up like BofA predicts, That translates disproportionately to the bottom line. Huge profit jump. That's the core financial idea driving that speculative view.
Got it. Leverage on the price. The article does mention valuation, though. Says it might seem expensive. Something like 63 times forward earnings.
Yeah, it certainly looks high if you just look at traditional metrics, especially for a company that isn't pure tech, right? 63 times forward earnings. That means the market's valuing it at 63 years of its expected profit next year. It is. But the source suggests, that Cameco's consistent growth potential plus its pricing power in what could be a rapidly rising uranium market, maybe that justifies the higher valuation for some investors looking at that long-term profit leverage speculatively.
Right, a bet on that leverage playing out. And just to quickly run through the key data points the source gave us. Market cap about $29 billion.
Yeah.
A really wide 52-week range, $35 to over $68. Gross margin 25.1%. And a tiny dividend yield, 0.17%.
Correct. So that's Cameco. It's really a play on uranium price and supply, maybe boosted by that Westinghouse integration.
Okay, now, switching gears completely. The source highlights NuScale power.
Yeah.
This feels like a totally different kind of speculative opportunity focused on the reactors themselves.
Totally different angle, yeah. NuScale is presented as a leading producer of small modular reactors.
SMRs.
SMRs, what's the big idea there? Well, they're a really innovative concept. Trying to overcome the challenges of building those massive traditional nuclear plants, the source explains they're prefabricated, like in a factory, then delivered and assembled on site. That modular approach is key.
So instead of this huge, complex, custom build taking years and years, you're using standardized, factory-built units, like Lego blocks for nuclear power.
Kinda, yeah. That modular nature makes it much easier to build nuclear plants in more places, maybe where a giant plant just wouldn't fit or make sense. And it's generally cheaper because of the factory production.
And faster too, presumably.
And usually requires significantly less time compared to traditional builds, yeah. The source even gives dimensions for NuScale's SMR vessel, just 15 feet across and 65 feet tall.
Wow, that's way smaller than you'd picture a reactor.
Much smaller. And the article points out a really big differentiator for NuScale, their SMR designs. They're the only ones that have gotten a standard design approval from the U.S. Nuclear Regulatory Commission, the NRC.
Okay, that sounds like a pretty big deal, clearing that regulatory hurdle.
It's critical. Now, their first NRC approval covered modules generating 50 megawatts each. But here's where the key financial insight comes in, according to the source. For an SMR module to be really cost-effective, like competitive with a similar-sized coal plant, let's say, it needs to generate at like 77 megawatts.
Ah, okay. So the 50 MLW approval was great for safety, for the design, but maybe not quite hitting the economic sweet spot.
Exactly. And that's why, the source says, NuScale's stock saw a big jump recently. The NRC finally approved its first 77-megawatt SMR design.
Right.
That approval. It's expected to fundamentally change their cost structure. It should clear the way for expansion, especially in the U.S. market, because now the tech is potentially competitive on price per megawatt.
So that 77W NRC approval, that's highlighted as a major catalyst for NuScale in this article. What about their actual business right now? Are they selling these things yet?
Well, for now, most of their revenue is coming as a subcontractor on one specific project. It's a 462-megawatt power plant project in Romania for a company called RoPower.
Okay, Romania. But looking ahead, where does the source see the real growth coming from?
It comes back to that tech demand, again, just in a different way than Cameco. The source thinks NuScale's revenue could really surge over the next few years, especially as they start launching their first plants inside the United States.
And who's buying them in the U.S.?
The specific demand mentioned is, again, companies, especially in the data center market, powering cloud, powering AI. They're expected to look at installing SMRs directly to get that massive, reliable, low-carbon energy they need.
So potentially selling these smaller, easier-to-deploy reactors directly to power-hungry industries, maybe even bypassing traditional utilities sometimes.
That seems to be the idea. And the analyst expectations the source provides for NuScale, they're really high, even compared to Cameco's pretty impressive numbers.
How high are we talking?
Very high. Between 2024 and 2027, analysts cited expect NuScale's revenue to increase at a, staggering CAGR of 118%.
118%. Revenue CAGR. Wow, that's a completely different universe of growth compared to Cameco's 8% revenue forecast.
It really is a massive difference in scale for expected growth.
So what's the catch? What does the source say about their financials, their valuation? It can't all be smooth sailing.
Well, NuScale isn't profitable yet, which, isn't unusual for a company trying to scale up a brand new technology like this.
Right, burning cash to grow.
Exactly. And the stock valuation isn't cheap either. The source notes it's trading around 11 times its estimated sales for 2027. So you're paying now for sales expected 3 years down the line.
Okay. Not cheap, not profitable yet. But the source still highlights it as a potential speculative opportunity.
Yes, it emphasizes that, look, it carries significant risk, no doubt, but its potential for much, much faster growth over the next decade. Especially if SMRs really do reshape the nuclear market like some people think, that makes it seem like a compelling stock for a speculative bet, like that $100 idea mentioned.
The potential payoff, if they execute, could be much bigger than with more established players.
That's the thinking. Higher risk, potentially, much higher reward.
Gotcha. And the key data points for NuScale from the source. Market cap around $5 billion. So much smaller than Cameco. A super wide 52-week range reflecting that volatility. $6.88 up to almost $37. A really strong gross margin. Actually, 76.67% on the revenue they do have.
Which is interesting, yeah. Shows the underlying tech could be profitable once scaled.
Right. And no dividend yield, of course. Typical for a growth company reinvesting everything.
Correct.
So, okay, let's bring it back to you, the listener. What's the main takeaway here from the source material we've unpacked?
I think the core insight is this. Yeah, the overall nuclear market forecast looks kind of slow, but this source makes a pretty good case that specific niches directly driven by these huge global trends, geopolitics, green energy, and especially those massive data and AI energy needs, could offer really significant, maybe even explosive growth opportunities.
Right. And the source presents Cameco, the uranium miner with supply leverage, boosted by Westinghouse and NuScale, pioneering these potentially cost-competitive small modular reactors as two very different speculative ways you might capitalize on that changing landscape.
And it's clear about the risks for both, definitely, but it highlights that high growth potential if their specific catalysts, their specific stories play out.
Understanding these very different business models, their specific drivers, like that uranium price forecast for Cameco or the 77-megawatt NRC approval and data center demand for NuScale, it gives you a much richer picture of what's happening in nuclear beyond just the big utilities, right?
Absolutely. It shows how these global trends are creating potential opportunities all across the nuclear value chain, not just at the utility level.
Definitely. And maybe here's a final thought for you to mull over, something that builds on that huge driver mentioned for both, but especially NuScale. The sheer scale of future energy demand from cloud and AI. Just think about how vast that demand is projected to become globally. And then ask yourself, can technologies like NuScale's SMRs realistically be built and deployed at the scale and at the speed needed to actually meet that demand worldwide? It's a massive challenge, technological, regulatory, logistical. But if they can pull it off, well, the opportunity might truly be immense. Something to think about.